Um, I want to take you first through the basics of future trading. Future trading is trading based on prediction of whether a price of an asset will go up or an asset will go down. So you are familiar with spot trading, but you are not familiar with future trading. So the first thing is, let's know the basics of future trading. If you look at Binance, for example, now I'm on Binance. I'm using Binance for this tutorial, although I don't usually use Binance to trade futures, but it's also good for trading. And so, if you look at Binance, here you have futures here. Okay, so in fact, let's first of all look at markets. Okay, so if you look at markets, here you have spot, you have futures. Okay, so if I click on futures now, okay, these are the coins that are on futures. You have USDT M futures. So in this USDT M futures, all the coins are paired with USDT. You can see USDT, SVS USDT, Bond USDT, IMX USDT, and so on and so forth. They are all paired with USDT. Okay. Now you also have Coin M futures. Coin M futures, they are not much. Okay, they are not much compared to the USDT M futures. But what is happening here is that you have coins that are paired on their own, not with dollars. So if I'm to trade coin MUS future, I'm using coin to trade to grow, either grow the coin when the price of the coin go up, or to grow the coin when the coin price of the coin goes down. So one thing, but we are not interested in this. We are not interested in this at all. We are interested in this one here. Okay, this is where we are. This is where our interest is, USDT M futures. Okay, so that's it. So now we have talked about markets now. So next is, you now click here that says futures. Okay, if I click on it, you have certain features here, certain things you need to know here. One is, let's start from the top. From the top here, we have the name of the coin that is already at the dashboard for us to trade. These are the prices for sellers, these are the prices for buyers. Okay, that's one. Now here you have what they call the mode. Okay, here is the mode. You can see it's on cross, but if I click on it, you have isolated, cross, isolated, cross. Now let me start by explaining what cross is. Cross is, for example, if you have $2, if you have $10, or let's say if you have $50, and you decide to trade with $30 remaining $20. Okay, now if the trading did not go your own way, maybe you predict that the price is going to go up, and the price now started going down, down to the extent that you see yourself having a loss, you know, already. Now it will get to a point, if your $30 is not able to withstand the trade, the remaining $20, Binance will go and collect it and use it to hold that trade for you. They will use it to hold the trade for you. So if the $20 plus the 30 cannot still hold the trade, then all your money can be liquidated. That is, your money is gone. You can't recover it again. So any money you have, they will go and use it to be holding the trade for you until it gets to a certain point, if you can no longer hold. But don't be scared, we are not going to get to that point. Okay, now that is cross. But when you now talk of isolated, here now, isolated means, if I have $50 in my futures wallet or account, and I want to use $5 to trade, or $10 to trade, remaining 45. Now that $5, I'm telling Binance that though I want to make profit from this $5, but if the trade did not go my way, I'm only risking this $5. Take it. Don't touch any other money I have. Just take the five. That's what it means by isolated. So you know the difference between cross now. Okay. cross, and then you know the difference between isolated. Okay, now that is the margin. Okay, that's what we mean here by the margin mode, the mode. Okay, now up here you have 20x, but if I click on it, you see I can drag it up to 50, I can reduce it up to 1. This is what we call leverage. Okay, leverage. This is what we call leverage. Now leverage simply means that because in futures trading you can use $2 to buy Bitcoin that is 30 something thousand dollars, but in spot you cannot buy Bitcoin with $2. You can only buy with as from $10 or so. So what makes you to be able to buy that Bitcoin is leverage. So you are using $2 to say, okay, borrow me some money up to 20 times of my $2. So that means I'm having $40. You will not see the $40 like in the sense you are going to see $40. No, you are only going to see that your profit you will be making if the trade go your own way will be as if you are trading with $40. Meanwhile, you are trading with $2. That is what we mean by leverage. So you are borrowing more money to trade a particular asset. So if I reduce it to 10, that means I'm borrowing 10 times of my money. So if I'm trading with $100, and I put 10x, that means it's as if I'm trading with $1,000. That's what leverage means. Okay, so now, but I want to caution you here. Leverage, if it is too high, you risk losing your money faster if the trade did not go your own way. But if it is too low, like 3x or 4x, you are still safe. You will not be able to lose your money easily if the trade did not go your own way. So the higher your leverage, the higher your risk of liquidation. Liquidation means your money is gone, because you couldn't hold the trade again with the money you have. So the money will be liquidated. Unlike spot, when you buy on spot, you are buying the asset. If I buy, for example, 50, if I use $50 to buy a coin, for example, and I buy the coin and they give me the coin, maybe 500 worth of the coin. Maybe I buy the coin at $0.5 and they gave me 500 with my $50, for example. Now if the price of the coin go down, remember my 500 pieces of the coin is still there. All I need to do is to wait for the coin price to come up so that I can be in profit and sell off these 500 pieces of the coin. That is spot. But for futures, you are not buying the asset. You are only using your money, small money you have or any amount of money you have, to borrow to be able to trade an asset. Because in futures, you are trading against people. You are not buying on the spot. You are trading against people. So if you have, for example, 5 people who say Bitcoin is going to go up, and you have 10 people who say Bitcoin is going to go down. Now, if you are on the side of these 10 people, eventually you are going to win the trade because 10 will overpower 5. But the moment more people join and say no, we believe price is going to go up, and they become 25 here, they will empower 10 people here. Price of these people will be in profit and these people will be in loss. That is futures. So when these people can no longer hold the trade with the money they have, and more people are joining this one, and price keep going up, maybe up to 1,000 or 2,000, people now continue to join this one, you can see they overpower 10 people. All the money these 10 people use in trading will be liquidated, gone forever, because more people. So you are trading with first of all, you are trading with institutions and heavy people with heavy money. That's why in futures we don't just jump into the market. We make proper analysis before we go into the market. Okay, so that's it. So but the only advantage future has is that you make profit quickly. You make profit quickly. Unlike in sport, you have to wait until the coin start pumping, that start going up. Probably it could take weeks, it could take months, it could take days. But in futures, immediately you will see your profit, immediately you will see your loss if you did not place the trade very well. That is one. Now another thing again, that in futures you make profit when price go up if you predict accurately that price is going to go up. You also make profit when price go down if you predict accurately that price is going to go down. Okay, that's for leverage. So you know what leverage is now. So you have to start with a very low leverage. Mostly I recommend to start with 2x or 3x. Okay, now that is that. So um just leave this open, leave this closed. This one we'll come to talk about later. So here that you see 00 is where you are going to deposit money to trade. So if you click on this double arrow, it says transfer money. So you transfer from your spot. For example, my spot wallet, I don't have enough USDT. Okay, but supposing I have enough USDT, all I need to do is to type in the amount I want to transfer. Let's say $20. Okay, or here, let's say this is what I have. I can just quickly click max, so all of them will enter. So this is what I bought. It's not enough to start trading. So once you click on, once you uh do something like this, click on confirm transfer. So you see the money will be there. You can see I have 0.02 USDT now, but that's just small. We are not going to use it to trade. Okay, so that's it. Now we now, after that, the next thing we now see is limit. Limit means you want to buy at a price that is convenient for you. Then we have another one that is market. We are not going to talk about all these ones. Okay, we are not going to, we are only concerned about market and limit. Now limit is you are buying at a price convenient for you. Okay, the market is you are buying at a price that the market is currently trading on. So if you look at, for example, here that is white is the current market price. So if I click on market now, okay, if I click on market and I click on buy, it's going to buy at this white price here. Okay, this price there, because it's the current market price. But if I want to buy for limit, I will have to set it limit, and I will now choose the price that is convenient for me. So I can now enter the price. Okay, I can enter the price and say, okay, I want to buy at $0.46 for this particular coin, because the coin is already trading at 0.5680, but I want to buy at 0.46. Okay, so that's limit. So I close it, and then now you know what limit is. So now the next thing is, how much in USDT am I going to use to buy? So let's say I have $20 here. That is my margin now. So we call it margin, my margin. So what is, how much am I going to use for this trade? So I will come here, out of the $20, I'm going to now drag, if I drag this thing here, that means I'm using 25% of my money. If I drag it here, I'm using 50%. If I drag it here, 75%. If I drag it here, I'm using all 100%. Okay, so you can see each percentage so of your money. So it's not advisable when you are trading futures to use all your capital. Go with part of your capital. Most especially, we do recommend 5 to 10% to start with. Okay, now after you now done this, the next thing is you will now come here. After you have set all this parameter, you will now come here and click on here. Either you are long and open long means you want to buy. Here open short means you want to sell. Short means, for example, this coin, if I click on the chart, as this coin is now, okay, something tells me that this coin is going to fall from this height that it is, or now this is the current price, it's going to fall up to this area here. It's going to fall up to this area here. So what I will do is I will now click on that. I will not click on if I come to open here. So I will now click, okay, let me use 25% of my capital, and then I will now come and say short. I will now enter the amount I want to short it, that's I want to sell it, and then put the amount I want to use, and then I'll click open short. Okay, so by the time I click open short, now once the price of the coin start going down, I will start seeing my profit here. You will see my position, my order, and my market, my trade will be displayed here. Okay. Okay, we are going to talk about that in the subsequent videos I'm going to send. So this is just for introduction, all the features you need to know in terms of future trading. Okay, so that's it now. So that's for open, long and short. Okay, so all this is what you need to know. So this side here is sellers, this side here is buyers. Okay, so in the next video I'm going to now send how we are going to take a live trade if you are to take a trade. Okay, that's what I'm going to send in the next video. So just go through this as part of introduction to futures trading. Okay, know the features, what limit is, what leverage is, what margin mode is. Okay, and so on and so forth. So I don't want the video to be longer than this, so that I can always digest it over and over again. So if you have any question, you can drop it for me, then I'll answer it. Then expect the next video. So see you in the next video. Thank you.